Hey, good morning, Facebook friends. Hope you're doing well today. Thanks for joining us. Appreciate it. If you like what we're doing, please share this video with your friends and family and like our page on Facebook at Statler Financial Services. Hey, before Dave gets in, I do want to remind you again about our free report on retirement strategies. All you have to do to get your free copy is text the word retirement to 863-285-3815. We'll get it right to you. And then otherwise, if you're in this post, right above this video, there's a link. You can just click on there and go right to it. So two ways to get that free report. Please take advantage of it. And hey, yesterday was a little bit of a red day. I'm sure Dave will talk about that when he gets on. We'll be back with you in just a few moments.
Hey there, it's 8:39. Time to check in on our money and find out what's going on Wall Street this morning. And we got a couple of surprises to share with you as far as stocks that get traded. Let's go downtown Sebring to the offices of Statler Financial Services and Phillip Statler. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. Hope you are too. Yeah, we got a few things come out. We got a little disappointment out there.
Yeah, we do. Before we get to that, let's set the table. We started with a little disappointment yesterday afternoon because we had an actual red day. It wasn't even pink. Dow was down by about 116 points. NASDAQ off by almost 38. Standard & Poor's down by almost 20. Sounds to me like trade worries are getting in the way again, aren't they?
Something is definitely getting in the way again, Dave. We're definitely seeing some downturn. And again, this morning, just kind of as a precursor, we're continuing to see some downward movement.
Yeah, I saw it in the world markets as well. Almost panic level over on the Asian rim as well. On the macro front, start out with jobless claims, which on a Thursday could be a market mover, but this time we're staying abnormally low and pretty much what the market expected, 216,000 new claims, which kind of indicates a pretty healthy employment market on our side of the pond anyway, right?
Yeah, it still does. I mean, you know, we can, I hate to say it this way, we could give up a lot of jobs and still be okay. I mean, our unemployment rate is so low that it's beyond full employment.
Yeah, that's the thing. We're at that point right now where the minimum wage is being pushed up in function as the number of jobs available outstrips the number of employees, which a free marketer will say is the way it should work anyway, right?
Oh, that's true. We definitely want, you know, the free market to take its course, and as jobs or employees become fewer and fewer, then to get the good ones, you got to raise the wage base.
Yeah, absolutely. Getting into the earnings season reports, with the earth dang near moved. I mean, Netflix has been one of the glamour stocks now for almost as long as you and I have been talking. And boy, the bloom fell off their rose in a hurry this quarter, didn't it?
Well, it did, and the numbers really are not that bad in terms of their financial numbers, right? They beat on earnings per share by about 4 cents. Revenue beat forecasts. So I mean, you look at that and you think, okay, we're in good shape. However, Netflix lost U.S. streaming video customers for the first time in 8 years.
Actually losing numbers. That's not just missing the growth rate, right?
That's right. That's not missing the growth rate. That's losing subscribers, going backwards, which is not a good thing. And then to add on top of that, Dave, they did miss their growth number on international subscribers. They expected something like, I think the number was 4.6 or 4.8 million new subscribers on the international front, and they missed by about 2 million.
Wow. Now, a few months ago when Disney announced they were pulling the rights of their own movies in so that they could do their own streaming service, you and I kind of went on a limb and said, Netflix isn't going to like that one tiny little bit. But I think I got to believe even the most bearish Netflix analyst would not have expected it to contribute to actually making them lose subscribers in a quarter. Backwards is almost unheard of in the tech industry.
Well, obviously, the analysts didn't think that would affect them because that was not built into their projections when they were looking at what they thought Netflix should be doing. And so I think that these other outside sources that we have now, like Disney and AT&T starting a streaming service, and all these different companies are now doing their own streaming. It is going to have an impact on Netflix, the first to market guys.
Absolutely. And there's more and more freebie stuff on stuff like my Amazon Fire Stick that, I paid $39 for the thing. Very rarely use it, but when I play with it, there's a whole lot of freebie stuff that I can do there without having to pay anything at all with a Prime subscription. So there's a lot of alternatives, and streaming gets more and more and more part of our fabric. Netflix is starting to look more like Microsoft in the computer industry, or IBM even, right?
Well, that's true. And, Netflix has continued to raise their price over the last 2 to 3 years. And so, they're going to have to be innovative here to come up with some more things to draw people in other than just the movies they offer, because those things they're losing. So it's going to come down to their own content they're going to have to create, because I know they don't want to go down on pricing, but there's going to have to be some mix there to get subscribers back.
Which kind of explains why they have been adventurous a lot more in the original programming on Netflix. Going to be fun to watch. I'm sitting here on one of my tip sheets, and there's an ad on it for IBM and Red Hat with the same darn domain. And IBM is actually reporting their earnings as well. How are they doing?
They are, but hey, I didn't tell you, Netflix is down almost 11% this morning before we get started.
Oh, I'm sorry. I was right. We didn't want to give the really bad news. That's right. They're just absolutely tanking. I just caught my eye with the IBM, and I know they're one of the other stocks that we're reporting on this morning. I'm sorry, I jumped ahead.
That's okay. Hey, IBM, they beat, and I apologize. My computer just decided to shut down my screen. So I don't have it right here in front of me of what that number was, but I know they beat by a little bit. But their stock was trading down just a tad when I looked at it last time.
I don't see them as far as my leaders on the losers and winners list this morning. But this is going to be the first quarter in which they actually have absorbed Red Hat, the people that do Unix, or Linux rather. So it's going to be kind of interesting to see how the dollars amount. IBM, I was paralleling Netflix a little bit. They're kind of trying to remorph themselves into a cloud storage company and a free software provider, with support as being their primary revenue stream. It's good to see them actually beat what the street expected, isn't it?
It is, but there must be something in the report that I'm not seeing, because they're trading down about 1%.
Down to a full 1%. That kind of smarts down the line. Did you see any other indexes that looked intriguing? I noticed that Union Pacific, we mentioned that CSX yesterday had a rough day after that railroad company reported. I didn't see what happened to the stock, but I did notice that at the very least on the two primary metrics, earnings per share and revenue, Union Pacific managed to beat overnight when they reported.
I didn't see Union Pacific. I do have a couple other banks, though. My system finally came back up. Hey,
okay. We're riffing a bit there. Your computer come back.
That Morgan Stanley came out and reported. They beat by about 9 cents a share, revenue above what the analysts had forecasted. And they were, what do I see here? They were still trading down. I'm not sure. Like in my initial report, it's not really giving me any indication of why that is. So in the cursory overview, it looks like to me it should be going in the black, but it's not this morning. It's down almost 1.5%.
If I was going to go out on a limb and bet, I'd say it has something to do with loan margins, because that seems to be what was creaming the other banks for the last 2 days, doesn't it?
It really does. You're right. Those things seem to be doing it. United Healthcare reported, the big health insurance company. They beat by about 15 cents a share. Their revenue also topped what was forecasted, and they're a company that has raised their full year guidance, which we're not really seeing that a whole lot right now. But they're trading up a little over 0.5% this morning.
They evidently aren't afraid of all the ballyhoo in Congress about health care, right?
No, that's right. They're well, let's face it, they got a pretty good size of the market share when it comes to health insurance.
Understood. Other indicators we got from earnings season.
And the only other thing I really have is I've got Phillip Morris, which we don't really talk about much anymore in the tobacco industry, but they had a pretty good quarter, beat by about 14 cents a share. They also raised their full year guidance going forward, and they're up. They're probably a pretty big leader today. They're up over 3.5% this morning.
I was going to say they're toward the top of my leader list, and you got to say they're known primarily as a tobacco company, but they have a lot of food brands and the like as well. They diversified successfully over the years.
Oh, that's true. They kind of saw the writing on the wall, I think, when it came to tobacco.
And I think they were kind of smarter than some of their peers in the tobacco industry. Resetting the table this morning, off day yesterday on Wall Street. Trade concerns, no surprises macro-wise. So other than the trade concerns, we're looking at trading the real companies that are reporting. And by and large, it wasn't a bad earnings season so far, just a few surprises and watching metrics we didn't expect. 45 minutes before we open, Phillip, what do we look like this morning?
It's kind of pink again this morning, Dave. We got the Dow down $31. The S&P 500 is actually even right now. NASDAQ's down 2. Gold's trending down about 0.25%. And look at silver. Silver's up a little over 1%. It's at $16.14 an ounce right now. That's a big move for them. And then we got crude oil up from yesterday's close, but down from where you and I spoke yesterday. It's at $57.05 a barrel right now.
And must be reopening the platforms out in the Gulf. That little bump up we had for a weekend there appears to be going away and get back into that trading range. Wouldn't you agree?
Probably so. I hadn't thought about it from that standpoint, but you're probably right. There probably got some more flow there through the Gulf of Mexico.
Most likely. Overseas markets, Asia really tanked on those trade concerns. The Japanese index was down the better part of 2% at the close. Hong Kong and mainland China markets also off, and that's dragged Europe down this morning. So I got a lot of red around the world to report to go along with our futures. Phillip, somebody needs some advice to stabilize one's retirement fund and find the right investments for me and my family. How would I find you on the phone?
Hey, they can get our free report on retirement strategies by texting the word retirement to 863-285-3815. Hey, to look at coaching you through retirement, give us a call at 382-0037 and let us sit down and do a financial x-ray analysis of your current portfolio to make sure you're going the right direction when it comes to risk and cost in your portfolio. And then join us every weekend, Dave, for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And we stream it at News Talk 730 a.m. and stream our little screed every morning as well at 1057lightfm.com. Phillip, thank you so much. We will catch you tomorrow, all right?
All right, Dave. Thanks, buddy. You take care. And I will be out tomorrow, don't forget, but I will talk to you on Monday.
Oh, that's right. You have a great weekend. Thank you, Phillip. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, again, folks, don't forget about our free report on retirement strategies. Text the word retirement to 863-285-3815. Or in Facebook, just look above this video at the post there, and there's a direct link to that report. All you have to do is click on the link. It'll take you right there. Again, I want to thank you for joining us today. If you like what we're doing, please share this video with your friends and family, and like our page on Facebook, Statler Financial Services. Have a great weekend. I won't be with you tomorrow. I got a leadership training, but have a great weekend. I look forward to speaking to you again on Monday.